Hi everyone. It was nearly impossible to keep track of all the requests on WhatsApp. In no way we would have found a common time that suited everyone. So instead, I am recording this quick, hopefully 5 to 10 minutes walkthrough on our topic of the day, how to short a stock. Now, for some of you seasoned traders, it may sound very, very slow, but for the benefit of the others, I'll keep it very, very simple. Okay. Now, as always, the usual, this is not a financial advice. Consult a financial advisor before you decide to do anything. These are just my opinions, and basically, you shouldn't listen to me at all, ever. Now, with that out of the way, let's start with something we all know. What is a long trade, a usual, regular trade that we all know? Now, let's take our stock of the day, APT, for example. As of Friday, APT was trading around $96. So you want to buy 100 shares, you pay 9,600 plus 10 or so dollars in brokerage, and you now own 100 shares of APT. How do you make money this way? You basically look to sell them for higher price in future. Basically, buy low, sell high. That's going long, what we are all used to. Now, going short means you are selling the shares first and then buying them back. Now, bear with me. How can we sell shares that we don't own? Through something called CFD. CFD is basically contract for difference. So you essentially have a contract with your broker, and not all brokers provide CFD, by the way. A lot of them do, but not all of them. So essentially, it's a contract with your broker that you will borrow their shares for time being and pinky promise them to give them back at the end of a certain period. Now, that period can be an hour, a day, 30 days. There is a limit. You can't have it forever. And you also have to pay overnight charges if you don't settle within the day. Okay. Now, that's not all. With CFD, it gets even better. There is also something called leverage. So it can be 5 times leverage, 10 times, in some products, even more. So, for example, let's take 5 times leverage. So, for 5 times leverage for the same $10,000 where you bought 100 shares of APT, you can now buy 50,000 worth of shares of APT, which also means 1% movement in the stock magnifies to 5% movement because you have this extra leverage money that you are trading with. If a stock moves 10%, let's say, and you can capture even 5% of the move, because you will never be able to enter at the lowest or highest point and exit at the other end on the extreme end. So even out of 10% move, even if you can capture 5% of the move, you essentially get 50% return on your investment in that trade, in that day, in an hour, most often within few minutes. So that's the basics. Now we did the talk, now let's do the walk, because that's the main part that I think everyone else were keen on. So IG is one of the broker that allows you to trade CFDs. Now, even within these brokers, I forget the term, but basically there are those which actually put liquidity in the market, as in you actually buy and sell shares. Even if it's a CFD, you actually put or take liquidity out of the market. Whereas IG, IC, CMC, those don't really plus 500. They are essentially just everything is on paper. They are not really buying or selling anything. It's pretty much virtual money trading with them. But for us, it doesn't make any difference. These guys are relatively cheaper. And how it's very basic for someone who wanted to just start or wanted to practice. This is a good place to start. So I don't recommend IG as such, but I just happen to have this open. So basically, if you go to ig.com.au, there is CFD trading. What I suggest you do is create a demo account first. Now I want to touch base on the risk associated with CFD trading, but I'll leave it to the end, okay? So create a demo account, enter your details. They'll give you, I don't know, 10, 15, $20,000 worth of virtual money to play with. And once you log in, see the demo? This is the demo account. Once you log in, you expect to see something similar regardless of which trader you're trading with. Okay. Now the chart may seem quite overwhelming to some who are not used to all the indicators. So let me dumb it down. Let's get rid of all the news and tweets. We don't need the HLOC data. Volume we will keep. Volume is, in my opinion, a very important indicator. But the rest, so relative strength index, we can tick off. VWAP, we can tick off. All right, that's simple. Now I have few tabs open. So this is basically, you can obviously have more than one script to trade. Let's just focus on APT. All right, so where are we? I think we've closed everything we wanted to. Yep. Okay. Volume is important. I'll come to that in a second. But basically, if you were looking to trade, and I will down the track also go through our discussion on why it opened where it opened, why it didn't go any further up, and so on and so forth. But for now, just on how do you trade CFD. Let's say this is the first minute. So this is a 5-minute chart. Let me change it to 1 minute. Okay, where are we? Oh, this is afternoon. Okay, let me zoom out a bit. Sorry, I could have kept the chart ready, but never mind. Okay, here we are. So, okay, so that's a 1-minute chart. I won't go into when I entered, why I entered, and the red and green candles. If you don't know candles, don't worry about that. Just see them as a line. Okay. Now, if this is the first minute, so you will never get your order filled there. But let's say around here, you have an opportunity to enter an order around 122.80. I have turned on single click, but you shouldn't. Now see here, it gives us an option to buy and sell. Usually these prices are not the same. There is anywhere from 1 cent to 10 cents difference. That's called spread. Again, you can Google that. But basically, you can just go sell straight away. Now, if at that time, obviously the price was what it was, 128 something. Let me change to 5 minutes so we can, I don't have to scroll so much, or even 10 minutes. So let's say you managed to get an entry somewhere up. That's the gap. This is from yesterday. It opened around here. And let's say right now it's at 120, okay, for sake of simplicity, or actually it would be somewhere around here. Let's say it's 123. So it would show you 123 here. You can say you want to buy 100 shares. Stop and limit. I'm sure all of you know stop and limit, but basically you are presetting values for your risk and reward. So at what point you want the stock to automatically close the position and control your loss, and at what point you want the stock to, you want this platform to book profit, so you don't have to sit in front of the computer. But anyway, so you put your sell order through and click on place a deal. If the market was open, your order would go through. It will deduct the amount from here. That's it. And then what you do is you watch. So if you had gone short, like we just did, we sold before buying. As the price goes down, you will see your profit here going up. So that shows you that you are in green, in profit. And around here, let's say around 119, for example, what you would do then, you would click on buy. You either preset your price to be 119 or you manually put an order for your 100 shares or 1000 shares, whatever you want. You place a deal and it will close your position. It also, on most of the platform, it also gives you an option to close the position from the chart itself for a quick exit. But basically that's as simple as that. you, instead of doing buy here, sell here, you are doing sell here, buy here. So essentially, if you know which way you are expecting the market to move, you can trade, and you can make some profit. See, that's a clear downtrend. So if you can identify the trend is likely to go down from top to the end, then you basically trade that. Um, Scalping is one of the strategy where you pretty much take a very short time frame position. So if it was a 10-minute candle, it would definitely be within that candle for me. For 1 minute candle, I won't change it, otherwise I'll be looking for my chart again. For 1 minute candle, there are multiple candles, and that gives you a confirmation, resistance, and so on and so forth. So we won't go into that. So that's basically it for short trading. Best thing for any of you to do is go to IG, go to CMC, go to IC. There are hundreds of options. Just Google CFD Trading Australia. Sign up with any of them. They all offer demo account. Sign up with them, play around with them. You're not losing any money. Do it when the market is live. Play around with your stop loss and limit order. All right. So with that concludes what I wanted to answer to a lot of people on how did I shorted the stock. Now, to give you the specifics, I entered at 122.60 today. That's where my order got filled. I had a higher order at 123, but that didn't get filled. So I bought a market order at 122.60, and I had my sell just just over 119, because I thought 119 may be resistance. So I had put it at 119.03. So that's where I sold, but after later in the day, I also bought back around 115.60 or something, can't remember. That was for long term, so I'm going to hold that. All right, now I would like to also go through what we were discussing in chats. Now I find it extremely hard to type over long sentences in on mobile. So hopefully this won't take too long, couple of minutes. But basically, let's start with the morning. So I picked up the news early at around 8 a.m. And I saw it was very widely reported everywhere. Now last close was 96-ish, and Square put a price tag of 126. So there's a fair bit of gap on that, right? Now going into fundamentals, whenever I say fundamentals, it's never going to finish in 2 minutes. So yeah, for those who are interested, this may go on for a while. Now, going into fundamentals, the real price of company's share is what company books will show you. Every quarter, they release their earnings or their profit and loss, their statements. If you go through that, that is what the real price of company's share is. This is what Warren Buffett looks at when he talks about assessing the company and whether he should buy into it or not. Now, 96 is the price tag that investors have put on it. Now, they realize someone more important has tagged it at 126, so it must be worth that much, right? So it's just numbers. If you think about it, it's just what people think it's worth. The company hasn't done anything different to what they were doing on Friday, right? This is all what we make that number to be collectively. To answer Hiten's question, what is pre-market indicative price and why it won't open at that? Because I said it may or may not open at that. Now, all right. Now, what is market? Market is basically just matching buyers and sellers. You can only buy a share if someone is selling that share. This is not like your economical supply and demand, because fruits and veggies are being produced every day. So that supply and demand is quite different. Here, there is a set number of shares which just change hands. So market is just matching buyers and sellers. So if the buy orders pile up, now this is pre-open, this is before the market open. If the buy orders pile up compared to the sell orders, the indicative price will be up accordingly. So there is an algorithm which looks at how many people are keen standing in the queue, what we call depth. in the line with their buy orders, saying if it gets to a certain price, I want to buy 1,000, I want to buy 5,000, whatever. Now, however, those are just bids, not executed orders. The market hasn't even opened yet. So it can't be trusted. People can pull the orders. More sell orders can come in 1 minute before the market opens, and your indicative price will not be relevant anymore. So if it had opened at 110, let's say there was only so much interest in buying that share that it opened at 110, there was a big room, there was a huge room to move up between 110 to the 126 price tag that Square has put on it. Let's say conservatively, even if it goes all the way up to 122, there is still $12 of room in there. So that's a 12% up and down. Now, I would have gone long if it had opened around 110. That's what my strategy was. And that's why I said if I can see a clear indication of green, I mentioned 3 green candles specifically, then I will go long and ride the up wave. Because if it had opened at 110, it would have almost certainly moved up to at least 122. Higher, but conservatively at least 122. Now, I would have gone long if it had opened around 110, like I said, but it did not. People get overexcited and treated it like a deal of the century and jacked up the starting price to all the way up to 124. Now, if Square reckons it's around 126, people jack the price up to 124 at open, it can only go down from there. And it did. And I saw that and I traded that. So I am going to change this to 1 minute because it's important that I show you maybe 5 minutes, maybe 3 minutes. That when I saw 3 consecutive candles being formed, now this is unusually slow. I don't know if it's because of aftermarkets or whether I'm recording. This is not supposed to be that slow. Okay. So on 3-minute chart, there were 6 candles on 1-minute chart, but on a 3-minute chart, there are 3. So the first one, I don't think anyone can ever get a fill in there because there are so many people in the queue with better or worse buy and sell orders. But here you're more likely to get filled, and it opened around 122.66, right? So I saw the downward momentum going all the way to 118. So by that time, not even way before that, I knew that it will not sustain that price. The support is way down below from yesterday. There was another, support line from last few weeks, but none of that mattered because it was going up and down on sentiment, on people getting excited. Now why is it going down if people are excited? Because people were too excited and they pushed the price up so much that then they were fearful that it can't go anymore. So a lot of people started selling to book profit. What happens when you sell? The price goes down. What happens when people like me short the stock in anticipation of price going down? These red volumes come in. Oh, I didn't talk about volumes. Look at the volume until Friday. This is business as usual for APT. What happens on Monday? Look at these volumes. 15 times bigger, 20 times bigger. So, all right, so volumes were pushing down. Short sellers were shorting the stock and causing the momentum to continue. So it went down quite a bit. But then it stopped around here, around 119, and then it bounced back with the buy orders coming in, right? So it bounced back. So another trade that I was keen on taking was if I see enough momentum going up, I was going to enter. But with 3 candles, I was waiting for at least, actually on 1-minute chart, there were 6, but I was waiting for one more candle, but it went sideways. And it was a good trade for me. I didn't want to stuff it up with another average trade. So I didn't trade basically, and it was work time anyway. So this is my side hustle, right? So I didn't worry too much about it and stopped it there. But you could have essentially, if you were active trader, you could have ridden this wave, and this wave easy. There were very clear indication from volume, from momentum, It's a very clear, clean pattern. Look at this. You can't trade this consolidation for a day trader. Um, all right, so that's that. Now I forget what I was talking about. So yeah, basically that's the sort of my reasoning behind why I went short. Why I decided to go short. Now I can't remember who, but someone asked, "Is APT likely to open lower or higher?" Now, to me, it's like asking a doctor, if I'm sick today, how much fever will I have tomorrow? I don't know. Doctor doesn't know. But whatever it is, doctor will be able to treat it tomorrow accordingly. So just like that, I don't know. I don't think anyone knows whether it will open low or high. Whatever it is, we can trade it accordingly. Trading for me is not knowing is it going to go up or down, is looking at the chart as it happens, because no one knows what's going to happen. But you can take some indication and confirmation from catalysts, so that's your market news, from patterns of chart, from fundamentals, technical analysis. So all those pretty pictures I had, they actually mean something. And those who are serious about trading and making profit and not losing money should invest their time in learning them all. So yeah, basically, another indicator is indicative price just before the market open. So you put them all together, that gives you some indication of which direction it may go. It doesn't always go that way, and that's why you must limit your losses. If you do 10 trades, if 6 of them are profit, 4 of them are loss, that's a good setup in my opinion, because you will never get it 100% right, not even close. Now lastly, but in my opinion most importantly, and I'm saying this, I've learned it by making the mistake, right? So learn from my mistake. Don't be tempted to open a real money account, not even $100, and start trading CFD. As I mentioned before, if with leverage, see, even if you have $100 here, they have margin, right? So it's not just 10,000 to 10,000. There's margin. They will let you trade up to 100,000. You can turn it off, but what's the point? Then might as well just trade regular shares. Leverage is very good. It amplifies your earnings, but at the same time, it also amplifies your losses as well. If you were to spend $10,000 and buy $10,000 worth of Afterpay Touch shares, and if it goes down today, you lost, not on paper, you lost 20%. But if you had equal amount of CFDs with leverage and it goes down 10%, you can lose half of your total money that you invested. If it moves more than that, you can lose 100% of your money and they will automatically close your position once it goes out of their range. So it is very easy to get tempted. And even after 10 successful trades, I wouldn't recommend doing your 11th trade on real money. Practice. There is no last opportunity and there is nothing good coming after this. There is always something coming up. So no FOMO. Trade as if it's your do or die sort of trade. That's how I trade. And limit your losses. If you keep holding, there are so many horror stories from my portfolio. If you keep holding, you are quite likely to lose a fair bit. All your previous trades where you made money, it will all go zero. So that's all. Thank you all. It was definitely more than 10 minutes that I anticipated, but it was quite unstructured. I didn't really have any notes or anything. So yeah, we'll chat to you all later. Feel free to send me direct messages. I'll try to reply to as many as I can, but I think that this basically covers the topic. All right. Cheers, everyone. Bye-bye.